Hello, everybody, and welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Again, I am still left-handed for now, so there'll be no drawing on the screen. I'll just be using this pencil to kind of point out stuff. Well, obviously, the results of the election pleased the stock market because you can see the stock market has had a huge jump in the last week. So that's good for us, I guess, if we have money invested in the market, which also means that volatility has dropped significantly because, again, during this time when we're not sure of what's going to happen because this is building up to the election, you can see volatility was also unsure as well. It was high. Once the results come in and we kind of know what the world's looking like, you can see volatility decreases. There's not as much unknown, or at least that's what people think. So the market has obviously spiked a lot because it obviously liked the results. Either the election's over, it liked the results, or both. So that's the S&P 500. If we look at the NASDAQ, of course, almost mirror image of what the SPY looks like. The Russell, again, is the only one that looks a little bit different, but you can see, look at this. This had a huge jump. It was kind of below its all-time highs and just had a huge spike. So that made a big jump last week. So what are we going to trade this week? Well, we're going to go to a stock called AFRM, and you can see earnings is over. Took a huge drop after earnings. And you can see where volatility is now, except for these two areas here, which is basically building up to earnings, right? This is spiked because earnings was coming. Except for those two huge jumps just before earnings, you can see this is as high as the volatility has still been for the whole year. So volatility is still pretty decent in this stock. The stock right now is at 47. I'm pointing this out now because you can kind of see where we're going to put our strikes. So 40 is kind of the low it's been over the last, let's say, 3 months, and the high is at 52. And right now we're kind of in the middle ground right here, like right at 47. So if we go to the trade page, normally I'd go here to 47, which would be 46. The reason I'm not, and I'll show you that by opening up the strikes, is because you can see how illiquid this cycle is. Let's just go always to at the money is where we like to start our look. So if we go to at the money, 47, 46, you can see, look at this, 275, 675, $4 wide, basically $3 and $6, $3 wide. You can't trade stocks like this. That's just too wide. You're never going to be able to get in or out of this trade for a reasonable price. You're going to lose a ton of money. Making money is almost impossible when the strikes are that wide. That's liquidity. But if we go to the 40 days, which would be tomorrow 39, look at the difference. 345, 360, 15 cents. 47.5, 10 cents, 9 cents. That's what liquidity is all about. And that's how we look around the market and we trade things. We also want to look at the expiration cycles. We always default to the monthlies if it works out because they're always going to be more liquid than the weeklies. But in this case, perfect example of why we can't even trade these weeklies. But if we trade these monthlies, totally fine. 10, 15 cents, bid-ask spread on 250 wide strikes. You can see 40, 42, 45. Absolutely fine. So, because I'm left-handed, I already set this one up for us. The stock is at 47. I essentially went down to that low of the last few months, which is the 40, which is why I showed it to you. And then I went as high as I could on the call side to leave it room to go up to still create a $2.50 wide iron condor to fit my rules. And $2.50 wide means 2.5 times 33 cents, which is our minimum, gives us 82 cents minimum we're looking for on a credit for a $2.50 wide iron condor. So in this case, if everything stays the same tomorrow, we're going to go down to the 40 strike and sell the $2.50 wide put spread there. We're going to go up to 55 and create a $2.50 wide call spread there. Gives us more room to the upside. You can see about $9 to the upside, about $6 to the downside. And as long as we're collecting at least 82 cents or more, this will be a valid trade for tomorrow. So that is our trade in a firm post earnings for 82 cents or more on this $2.50 wide iron condor.